Yo, what's going on, guys? Welcome back to another video here at Trader's Journey. This tutorial today will be covering off support and resistance levels. A lot of my members have been asking, and a lot of you guys in general have been asking how I chart and why support and resistance so important for trading and investing. So I'll be covering that through on this live, and feel free to leave any messages or questions in the live chat. But just before we get into this, guys, if you haven't checked out my Instagram, it is traderjourney_official. So be sure to give me a follow there and hit me up in the DMs if you guys need any help or have any questions. So guys, as you can see here from the charts, we're going to get straight into this. You can see I've got S&P 500 charted on this graph right here. Now, why do I pick SPY for this? Because SPY is something I chart every day, every week, every month. Throughout the year, I am charting SPY for their key levels, critical support and resistance levels, and they act like a sort of gauge and guide for me as to how the overall market is trending and how it's reacting to any news that might be out on the market. So as you can see, we have been in S&P 500 and the upward trend remains intact here. Now this tutorial is specific to support and resistance, so I'll be building on the support and resistance levels and looking at trends and looking at some other areas which I tend to look at when I'm charting whatever stock or whatever ETF. Now, like I said, S&P 500 is very critical. It helps me gauge the overall market sentiment, and I tend to chart it on a daily basis just to make sure we understand what the market is doing and how it's reacted for the days to come and weeks to come. So as you can see, I am looking at the daily time frame. So what I tend to do when I begin charting anything is look at the bigger time frame. So what I tend to do is even go as far out as the weekly time frame. So I'll go to the weekly time frame and I'll just zoom out here, and I'll probably go, a few years back, maybe as far back as 2016. And what we'll do is, as you can see, I haven't actually done that, but I recommend doing this for anyone beginning their charting or any new traders out there. So what I would do, I would chart the lowest price here, which roughly in the last couple of years is 217.92 on the S&P 500, and then I would go ahead and chart the highest price, right? And that would be your resistance, and your resistance currently for S&P 500 is 398.14. So what I would do is go ahead and chart the lowest price level on the chart, which is there, 217, which is what we said, 217.71, and then I would go ahead and chart the highest price. Now that is your lowest support level, and that is your highest resistance level. Now just to make it clear, guys, what support and resistance levels are. Support is where the price comes down and rejects and gets supported by a lower price level, and resistance is where price tries to break through a higher price level but rejects, and that is now known as your resistance. Hence why it resists breaking through that price, hence why we call it resistance. So I hope that makes sense. That's pretty easy stuff over there. So what we'll do is we'll go from the weekly time frame, and what I'll then do is work my way down to the smaller time frame. So I'll go from the weekly to the 1 day time frame. Now what am I doing on the 1 day time frame? On the 1 day time frame, I will now look for support and resistance levels in between the lowest price level which we charted and the highest level which we charted. Now a key one you can easily spot here. Now you know what I'm going to do? I'm going to delete this and start fresh. I want to delete this and start fresh just for this live, just for this video, because I want to show you guys that I tend to rechart S&P 500 on a monthly basis, and that time has just come about. So I'm going to do that live here for you guys. So I'm going to chart the bottom like we said, chart the top, which is currently sat at 398.30, roughly around that price, and then I'll go down to the daily time frame. Now the daily time frame, I will look between those price levels for any key support and resistance. Now this is key for you guys, anyone new to trading and charting. This is key, which you guys need to understand, which I'm going to mention now. So make sure you're paying attention to this. Now when I'm charting the support and resistance levels, I don't chart any old price level like this one right here. I will think twice before charting that particular price level. Now what I want to see before charting any support and resistance level is that the price point or the candlesticks on your chart hit that particular price level at least twice. For me to chart a particular level, I need to make sure that price level has hit or rejected or supported more than twice. Now as you can see here, this support level here is key, 321.43. Now 321.43. Now why is that key? Because as you can see, as I begin to chart this level, I want you to zoom in here and you can see the price level has supported twice, right? Then it's supported a third time over here, right? So that's three touches, and then you've got a potential fourth touch and a fifth touch. So this for me is a critical support and resistance level. So I will go ahead and chart 321.87. Then I'll scope out and see is there any other key levels which we can easily see here to be easy support and resistance. Now this is a key resistance level. Now why? Now you can argue that this didn't actually touch more than the candle wick didn't touch more than once, but I'll tell you why I've charted this level of 359.21. Now there is some exceptions to the rule. Now the exception here is when the price comes up and rejects us hard and you see a big sell-off, that for me is a critical resistance level. So there are some exceptions to this rule, which is why this support area here of 233.14 I will also chart, because as price came down to support this level, it rejected and it had a huge bounce. So for me, even though it's not hit, is the candle wicks haven't touched, well, potentially twice here as well, but say in a long time they haven't supported this price level for a very long time, I will still chart that price level, because for me that is critical, because price came down, supported and rejected pretty hard, and price recovered pretty well. So there's an exception to the rule, but generally speaking, guys, I want to only chart levels where the candle wicks have touched more than twice. I hope that makes sense. Pretty easy stuff there, right, guys? So again, here is a key level here. Not as clean, but it doesn't have to be completely accurate, right? But we want to make sure that when you're looking at the chart, you can clearly see these peaks, and then you can clearly see the support level, you can clearly see resistance, and it should be very easy. You want to make sure you're charting these very critical levels accurately on your charts. Obviously, I'm doing this pretty quick for the purposes of this live and this video. As like so. So what you should be turning out with is something similar to this, but I'm going to just adjust this price level. This is a bit cleaner. There we go. So feel free to tweak your price levels as you chart them, because you might start to see better support and resistance. So on the bigger time frames, you don't want to go crazy with it and chart so many price levels. You want to keep it simple like this. This is a very fresh, clean chart, and you can clearly see support, you can clearly see resistance, and there we go. Now, where do we go from here? We can go from the daily time frame all the way down to the 4-hour time frame. So on the 4-hour time frame, you'll see now there's potentially more charts. You might not even see any, but there's potentially more levels you can chart. So just scope out and see, is there any other price levels you've missed? If so, just make sure you chart those like so. Here we go. There's one price level there. We can chart that. Is there anything else you've potentially missed? You might want to, even if there's a marginal change and there's still a resistance level, you want to chart that as well, like so, because this is still a key resistance level and key support level. So you want to chart that as well, and go through anything else. Can you see, even if it's slightly, like I said, slightly marginally off, chart that as well, because it will help you in identifying key support and resistance, and these will come in handy as you progress through your trading and your investing. So there we go. Again, we've not overdone it. The charting is clean. You might want to zoom in here, see is there any critical levels here. I guess so, but you can be picky with it, but just try. Over time, as you gain experience, you will be able to chart this pretty quickly, and you won't be spending much time doing this. This should be something you can do in your sleep, guys, as you get more experience with it. So here we go. I'll chart that one anyway, not cleanest, but there we go. So you should have something similar to this. Your chart should look something similar to this. Now, where do I go from the 4-hour time frame? I skip the 3-hour time frame and I skip the 2-hour time frame. I go straight to the 1-hour time frame. Now again, you'll see more levels being, you can possibly chart some more levels here, but you'll notice your charts will look smaller, so you can't potentially go back more than a year, because your charts have naturally gone smaller as you go to the smaller time frames. So again, you might see some more support and resistance. Look for 2-3 touches on the line. As you can see, 1, potential 2, 3, 4, 5, potential 6, 7. So yeah, make your levels. In my eyes, guys, the less levels you have, right, the easier it is for you to interpret your charts. When your charts are full of lines, you're not going to be able to interpret them as well. So keep your charts clean. If you have to rechart once a week, just do it, because it will help you in your trading and your investing. So there we go, key support and resistance there. Any other levels you can spot, just scope them out, and your eyes will get trained for this, and you'll get easier at doing this. Anything else? Here's a key level. So this is potentially the last one here. There we go. So there you go. You've got all your charts, all your price levels charted here. You might have one more. Try to put more attention into the latest price levels. For instance, in the past 3 months, because everything in the past it slowly becomes irrelevant, but you still want to be charting those on the bigger time frames, because they will still play a role in the future. And I'll get into that, and I'll get into why support and resistance and from a historical perspective is so important. But try to pay more attention to the current price levels than old price levels, which are now irrelevant. So what you should see is price charts such as this, and from the hour time frame, I'll then go down to maybe the 30-minute. I'll look at the 30-minute and see is there anything else. You potentially won't see anything here which catches your eyes, but you never know. You might see another price level like so, which is right here. So you might see some other price levels. You may not, and don't stress out looking for price levels if you can't see them on the smaller time frame. That is absolutely fine, and that's where I go with S&P 500. I'll just go to the 30-minute and I'll leave it as that. I won't go any further. But if you're looking at particular stocks in particular that you're looking to scalp and get into day trades, then you might want to go down to the 15. If you're scalping, you want to look at the 5-minute and the 3-minute, maybe even the 1-minute if you're scalping. So that is what I'll do on the S&P 500. Now, when I'm on the 30-minute time frame, I will go back to the 1 hour time frame. Now, what I want to do on the 1 hour time frame, and even I'll just scope out and see what the charts are telling me. Are we in an upward trend? Are we in a downward trend? Right? I like to scope that out. If you can't see it on the 1 hour time frame, then take a step back and go to the 4 hour time frame. Now, you guys can tell from my previous lives, previous charts, anyone who's followed me for a while, you guys will know on the S&P 500, I've seen this upward trend forming here, right? Now, I've changed my analysis since then, because what I'm seeing is something different approaching here. We are still in an upward trend, as you can see. We are still in that upward trend, and it is intact. But I'm seeing a range forming here on the S&P 500, and this is what I'm seeing here, guys. Are you seeing this? This is a rising wedge, as I like to call it, a rising wedge forming here on the S&P 500. And where do we go from here? Right, I see S&P 500 consolidating within this wedge here, and we may see a breakout of this wedge, and that is where you need to pay attention, because I like to spot these patterns forming on charts, and I like to exploit them, because as we can see here, the S&P 500 is clearly in this rising wedge. Clearly in a rising wedge forming here, and anyone could tell you that by looking at this pattern, right? So what we want to keep a close eye on here on this rising wedge is that S&P 500 is potentially going to continue to consolidate, potentially reach higher highs here, and if we fall out of this wedge, if we fall out of this wedge, that could be your trigger point for a bigger sell-off on the S&P 500. I know the market's been turbulent over the past couple of weeks, but believe me, we are yet to see a bigger sell-off, and this particular sort of charting and technical analysis will help you scope out and understand what potentially might happen next in the market in general, and what's happening on the S&P 500 ETF. Now, as you know, tech rules over S&P 500, so you're talking about the FANG stocks, Facebook, Apple, Netflix, Amazon, Google, all these type of stocks. So as tech rules this ETF, we could see tech sell off here. So we'll need to pay attention. We may even break to the upside on this rising wedge. We may break through this wedge and start hitting higher highs, potential to that 400 plus range on the S&P 500. But as of now, based on my analysis, we have got a clear resistance point here at 398.07. If we can break 398.07, then we'll reach higher highs and the market should regain its upward trend. So I hope you guys have enjoyed this. Now, why is the support and resistance so key for me? Because support and resistance, generally speaking, from a historical point of view, that price points tend to repeat themselves. Now, if we can understand that history tends to repeat itself with the charts and with the price levels, we can understand how that can help us with gauging how the market is going to react when it hits a certain price point. Now, as you guys probably remember, on my previous lives, at my analysis on the S&P 500 was that it was way overextended, right? It was way overextended. Now we can see from this upward trend that I've charted here, which is a new upward trend which I've charted, I can see that the S&P 500 was really overextended because we were waiting for it to come back to the trend line, and it finally did so. It finally did so on the 4th of March. You can see the bounce at the trend line, and it continued upwards and it regained that upward momentum. So what I like to see here is the key point here for me when we were analyzing the charts. From what I remember, yep, it was 378, and I believe it was 387. I think I had charted, if I can find it, 387 roughly here. So I'm just going to go to the smaller time frame so you can see what I mean. When I was charting the S&P 500, there was key levels which I was watching, right? Key levels, and one of those at this point is 367. The next one was 372, and I think we have another price level here to watch is 383. So I'm going to be watching 383 very closely in the weeks to come, because if 383 doesn't support, we can then retest the next support, which I have currently charted of 378. If 378 doesn't support, we can then potentially see 372.85. So what I do is, guys, I use my support and resistance as price targets. I use them as profit targets. I use them as sell-off targets, sell-off zones, rally zones. So I tend to watch these levels because they're almost like trigger levels, guys. I like to call them trigger levels, because if these price levels don't support, then you can see a potential sell-off back to the next support. Right, and that's how your charting can help you understand where price is going to react and how price is going to react. Because for me, if price doesn't support one level, it's going to retest the next level. You see what I mean? And as long as you've charted your your prices correctly, as I've just shown you, then you're going to have good sort of projections of where you think the price is going to go. Now, obviously, support and resistance does not work out complete 100% accurate all of the time, but for me it's a clear gauge as to how to understand what's happening next, right? So that is what support and resistance allows you to do. It allows you to forecast and expect what might happen next to the price, what might happen next. And like I said, S&P 500 is what I use to understand what's going to happen next in the overall market. Right, that's what I like to use. I like to use S&P 500. Some people like to chart the NASDAQ, everything else, and all the other sort of ETFs which come with it. So S&P 500 is what I like to use, and I hope this makes sense, guys. I hope I try to make this as easy as possible for you guys to understand. And yeah, this is pretty much how I go about charting my levels. Now, obviously, some people might have different opinions, right? Some people might say, "Oh, what I see happening on S&P 500 is this." You might want to chart a sharper upward trend like so. And that's completely fine. That's completely fine. No one's there to say that you're wrong. No one's there to say that you're right. It's how you interpret the charts. And how I interpreted the charts was a rising wedge forming there, as you can see. So that is how I do it, and that is what we do. But yeah, this is just a tutorial on how we chart, how I chart. But for me, what I'm seeing here is a rising wedge. A rising wedge. Yep, and it's waiting for a breakout. At some point it's going to break, and at some point we're going to see a bigger move. But for now, this is how I chart, and I hope you guys have enjoyed it and understood what's going on. So I'm just going to go back to the live chat if anyone's got any questions. Has anyone got any questions on charting support and resistance? Any at all? Happy to answer them, because I can see someone, Kadiri's got a GME chart question, which I'm happy to look at. If no one else has any questions on what I've charted today, the tutorial today, then we're happy to leave it as that, and I can answer Kadiri's question. If anyone, give you a couple of seconds for anyone who's got any questions. Looks like we don't. Okay, Kadiri says he wants me to look at the GME chart. We'll look at that before we end the tutorial today. GME, man, three waves, son. seen 3 waves on the charts, which is nuts. GME is doing some crazy stuff. People are going crazy with GME. I'm not in GME myself. Now GME is a hard one to interpret because we've got consolidation, breakout, consolidation, breakout down, and now we're entering consolidation phase again. Thank you so much, Jack. I'm really happy that's helped you out. And yeah, I've tried to make sure this is as easy as possible to understand, because sometimes I do tend to go on a bit, but I really hope this has helped you in understanding. So this is how I would have charted GME. So this is how I would chart GME. I would chart the price level, like I said to you before, guys. You don't have to go to the bigger time frames. You can just do the 4 hour if it's easy for you, if you don't have time to waste, or if you want to do things quickly, then just go ahead and do this. Chart the highest level, chart the lowest level, look for any levels in the middle, like so. That is a key resistance level, because what did the price do as it resisted that level? It had a big sell-off. Where did it sell off to? It sold off to 113, right? So we're going to chart that right like so. That is a key support, because as price came down, it supported and it's almost hit that price level 2, 3, 4, 5 times, right? And then you want to chart this level, because this is a key resistance as well. So you want to keep your chart simple here. Now, I don't like charting these meme stocks because there's just pump and dump situations here. So we're not trading and investing here on value. It's obviously speculation, high speculation, where people are profiting from these big swings. So I'm just going to do this anyway, as Kadiri has asked the question. So yeah, so I'll do that. I don't see any other key support and resistance levels. Let me know if I'm missing anything. You can shout out in the live chat. But here we go. Might be some other levels here. Yeah, there's one more level here, which I like support there. Boom. Right, so that's pretty much it. Now, where do we go from the 4 hour? We go to the 1 hour. What do we see happening in the 1 hour? I mean, GME, the amount is swinging here. It could be enough to just profit off of the support and resistance if you want to play it. But I'm not playing it because it's way too risky, and it doesn't match my risk appetite, I'm afraid, guys. So I might want to chart that support level. Look for any other support and resistance. You can see some resistance here, potentially hit the other candlesticks before, and you have another resistance here. And you can see how these price levels react as... Look, this is what I mean by support and resistance. Price resisted here, right, on GME on the 25th of January. Now, what is happening in today? This is how history repeats itself on price levels, because as we can see, price is supporting there on the 26th of March, which was just this Friday, and it acted as resistance before. So you can see what I mean, guys. Support and resistance can help you. Charting historical price levels help you understand what might happen in the future, and it clearly here it has happened. It has happened, guys. Here is a strong support level, which I didn't have charted clean enough, so I can go ahead and chart that again, right? So look at that resistance now acting as support, right? So you can see what I'm saying here, guys. You can see what I'm saying. And the charts don't lie. I've always said this. The charts don't lie. My charting seems to work for me. So if it works for me, I'm sure it can work for you, right? Just look at this. Resistance here acting as support in the future. So this is how I would go about charting GME. But I would stay away from charting any areas of just choppiness, any consolidation area, because that's not going to help you. You want to make sure you're strategically exploiting these big moves in the price, and that's what you want to pay attention to. Exploit the higher price movements between support and resistance. That's where you exploit. That's what you're supposed to exploit, and that's where you can profit the most. So then I'll go down to the 30-minute time frame, see what's going here in the more recent times. So as you can see, big swings here, and you can use this support and resistance to guide you. That's what I wanted to basically say. I use support and resistance to guide me for profit targets, price entry into a trade. This is what I use right now on GME. Where would I look to enter? So I would look to enter on GME, not saying I'm going to trade GME, because I'm not, right? But just because Kadiri's asked the question of me charting GME. But if price came down to 113.09, seen as though that's acted as a very key support level twice, maybe 3, 4, 5, 6, 7, 8 times, that is going to act as entry for me. So I would like to use 113 as entry. Where would I like to see profit targets? I would like to see profit target in the short term of 219, because what happened on 219 is resisted once, twice, 3, 4, potentially 5 is touched, 6, you know, this. So you could exploit these swings to profit. The support and resistance can be exploited to profit off of these levels. So I hope that makes sense. I don't want to make this a long video because I wanted to make this quick, short and sweet so everybody can understand, especially for any new traders. If you have any questions, feel free to DM me on Instagram. It is pinned on the live chat, so feel free to drop me a message there. But that is pretty much the tutorial 101, support and resistance 101. That is basically it. So really appreciate you, Kadiri. Thanks for your feedback. Thanks for everyone watching. Thank you, Jack, for tuning in. A member of ours there. Great to have you, Jack. Thank you very much, Kadiri. Anytime. Oh, Bongman. Glad you caught it, Bongman. But this is going to get posted. So if you have missed any of the tutorial, Bongman, you can watch it back, and that goes for anyone else as well. If you've missed part of the live and you want to go over what I discussed and what I talked about, you can. Oh, thank you so much, guys. I really appreciate your thank you so much. Light work, Wes. Thank you everyone for watching and supporting. Only 11 watchers, but that's all I need. If I'm getting support and appreciation like that, I'll keep these coming. So if anyone needs any other tutorials, if you're stuck on anything, particularly my members, let me know in the Discord, guys. If you guys are stuck, drop me a message on Instagram if any of my members are stuck. And if anyone else wants to get into a discussion, I'm happy if I have time for it. But now I'm dedicating most of my time to the members, as you guys can understand. So let me know if you need any more tutorials, members. Please just give me a message in the Discord. If you're stuck on anything, let me know and I'll make a video for you guys. So that really rounds up today's video. Thanks for everyone for tuning in. We'll catch you probably this evening as we go over some plays, hopefully for the week ahead. So I really appreciate you guys. Take care for now. Have a good day. Enjoy the rest of your weekend. Take care. Goodbye.